Yeah. Okay. So it's only 2 hours or 4 questions. So it's actually quite rushed. And the question is not very short, so have to work very fast. Have to work very fast. Hey, any other people coming? Kelvin? Bella?
Don't know.
I'm still sleeping, I think. So how's your paper in the past 2 days? On Monday and Tuesday. Doing well?
Okay lah.
Okay. Oh, Kevin, good morning. Okay, are you ready? Yes. So you ready? Then we can start. Question 1. So we start from question 1 first. Did Mr. Nairo did tell you the tips, right? Exam tips. How many chapters are?
6.
6, not including bank reconciliation, right?
No.
Yeah. Okay. So it's actually the question 1 now. Okay. 6, 7, 8, 9, 11. Okay. 6, 7, 8, 9, 11, 14. 6, 7, 8, 9. 6, 7, 8, 9, 11. So what is your 6, 7, 8, 9? Six is non-current asset, so meaning depreciation, trade receivable. Okay. 6, 7, 8 inventory, year-end adjustment. 11 is preparation of financial statement, closing entry. And 14 is financial analysis ratio lah. Oh, okay. Yeah. So okay lah, bank reconciliation is the one that is a bit difficult for you, so it's not tested. So okay lah, the rest should be alright. Is that right? Okay, right? 10,
Okay.
12, 13, okay, huh? Okay, now. So without delaying, so we look at question 1. Okay, so question 1 is basically, you can see all the past year, they will be definitely test you question 1 type of question. Question type of question is actually refer to chapter 11 now. Yeah, right? Chapter 11. And of course, chapter 6, 7, 8, all this that you have learned, you will be actually tested in your chapter 11, which is in question 1 now. So this question 1 actually here they say prepare the SOPL for the year ended 30th September. So you see this one, 30th September. Okay, so if your closing is 30th September, then when is your opening? When is your opening?
1st October.
1st of October, yes. Yeah. So your opening is 1st of October. So meaning for this question, your opening is actually, yeah, so your opening is actually 1st October 2020, correct? Yes. All right, to 30th September 2021. So it's actually 1 year. So this is your opening and this is your closing. Yeah, all right. So you must be able to identify when is your closing and when is your opening. Yeah. So your opening is 1st October. until 30th September. SRFP, okay? Explain your adjustment for prepared expenses and accrued expenses in relation to the time interval concept. Yeah, time interval concept. So prepaid means we paid until the following year, which we need to minus, meaning is not belong to our current year expenses, right? Accrued means we already incurred but we haven't paid. Yeah, we only paid in the following year, right? So this accrued expenses, meaning we already incurred, so it should be our current year expenses. So we need to add back in SOPM. So the amount that you add back is actually a current liability. Yeah, the amount that you add back is actually a current liability. All right. And these prepared expenses, the amount that you minus is actually current assets. Yeah, all right. Okay, explain how the allowance for doubtful debt is an application of the prudence concept. Yeah, allowance for doubtful debt. Why is a prudence concept? Why? Allowance for doubtful debt means what? We expect there will be like 2% that we are unable to receive, meaning we already know. So that's why, and this is considered like an expense, like a loss. So we have to take into consideration. Yeah. So that's why allowance for doubtful debt is prudence. Prudence means we should not overstate asset, income. We should not understate liability, expenses, losses. Okay. Right. Okay. Now, this kind of question, the thing is you need to be fast now. So when you read the question, you can actually the best thing is you are able to print it out. So when you read, you just make a sign. Yeah, just make a sign. See whether you have actually done or not. So this is your opening inventory, sales, purchases, office insurance, salary, utility, property owned, okay, accumulated depreciation. So these are all your non-current asset, where you have two non-current asset, property and office equipment. Trade receivable, bad debts, okay, allowance for doubtful debts. This is the opening, okay. Bank cash, so bank cash, this is not overdraft. Overdraft will be on the credit side. Okay, drawings, capital, term loan, trade payable, return inwards, return outwards. So return inwards and return outwards is actually in your SOP under the trading account. Okay, closing inventory is 67,000. Depreciation, 4% on reducing balance, and office equipment 25% on cost. So 4% on reducing balance method, meaning this one is actually using net book value. Yeah, we have to use net book value times 4%. That will be our current year depreciation. Office equipment is very easy. You just need to have the cost times 25%. That is your current year depreciation. Yeah. Okay, number three, utilities owed as at year end was 850 and has yet to be recorded in the books. So see, this one still owing, huh? Okay, omitted. So office insurance included in advance payment of 1,200 was made for next year. All right, okay, so this 850 you have to add back. Right, we are still owing. Okay, we have to add back. Yeah, so meaning we need to debit. We need to debit the utilities and credit accrued utilities. Yeah, so it's a liability. And for insurance, we made an advance payment. Okay, advance included an advance payment 1,200. So this 1,200 actually we need to minus. Yeah, was made meaning we already paid. So here you have insurance, right? So you need to minus. Insurance need to minus 1,002. Utilities need to add back 850. So the 1,002 that you minus is actually a current asset. Yeah, a current asset. Okay, right? So number three, this sort of question is very, very common for you. So you check all the question one, definitely they will test you accrual and prepayment. Okay, the owner's family has taken 3,000 worth of inventories for their own use. Right? Okay, so this one is actually, what is this, Kelvin? Number four. What do you call this?
Withdraw.
Yeah? What do you call this?
Drawing.
Yes, drawings. Yeah. But this one is drawings in terms of goods, see? Drawings in terms of goods. Yeah, this one actually is drawing in terms of goods. So in drawing in terms of goods, okay, yeah, you see, worth of inventory, So drawing in terms of goods, so meaning you need to minus from your purchases. And these have yet been recorded in the book. So you see this one haven't recorded. So if you want to record this one, what is your double entry? Okay, so what is your double entry? So if you want to record this one, your double entry will be you debit, okay, you debit drawings. Right, you debit drawings and then what do you do? You debit drawings and you credit
Inventory.
you credit purchases.
Oh, yeah.
Okay, you credit purchases, yeah. Right. So this one, you have to remember you credit purchases. Like here, this utility, okay, like this utility is basically you debit utility, okay, and then you credit accrued utilities. Yeah, okay. Now for this insurance, basically what you do is you debit prepaid insurance and you credit insurance, right? Okay. Yeah, because you actually paid in advance. So you have to be very clear on how you make the adjustment. So credit here means minus, debit here means you increase our utilities. Yeah, right. So remember to do this adjustment. Allowance for doubtful debt for the year ended 30th September 2021 is 10,000. Okay. So meaning this is your closing. Yeah, do you see that? This is actually the closing. Right? This is actually the closing. So our closing is correct. And that's so meaning the question already told you the closing is actually this this amount. Yeah. And it was decided to write off additional debts totaling 5,000. So we need to increase the bad debts. Yeah, increase additional of 5,000. All right. Then this one is your closing allowance for doubtful debt 10,000. So you see we have a bad debts here, right? Okay. So meaning with this one, we need to actually increase plus another 5,000, right? So this one you need to make adjustment. This one you need to make adjustment. Okay, and your allowance for doubtful debts opening is 7,000. So what is your okay for this question? Your allowance for doubtful debts is it increase or decrease?
Increase.
Increase. How much?
3,000.
Yes, 3,000. Correct. Yeah, because your closing is 10,000, so your opening is 7,000, so it increased by 3,000. So this increase is income or expenses?
Expense.
Yes, expend. Yeah. Okay. So here plus 5,000. Right. Okay. And this one, the closing, which is 10,000. Yeah. Right. Okay. So for utilities, we need to plus at 5 here. For insurance, we need to minus. Okay. One. So you see, these are the notes that you can put down before you start, then so that you won't miss. Okay, of course, this one you need to do working for depreciation. Okay, discount receipt of 500 from suppliers was omitted from the books. Okay, what is the double entry? This one? Yeah, what is the double entry for this one? Debit.
Trade receivable.
Debit trade receivable and credit.
Discount received.
So credit discount receipt. So this credit discount receipt is actually our income. So this is actually as our other income. Right. So later on, remember to adjust the trade receivable. Yeah, and write off additional debts. This one also have to adjust the trade receivable. All right. Okay. So now we have gone through the question, so we can actually start to.
Sorry, it's trade payable.
Oh yeah, trade payable. Okay, yes, trade payable because we increase. Correct. See, sometimes it actually blur. Okay, so that's all, yeah. Okay, so now we can actually start. All right. So So we can start from, so we have to do SFPL, the full set of SFPL. Okay, so I have put my question and answer in front of me, so it's easier. Right, okay. So I put, I want to save time, so I put short form. Again, 100th September 2020. Right. Okay. We're going to use what, 3 columns? Yeah, it's up to you. You can use up to 3 columns in the one. Okay. Sounds okay. This one actually given, they're given from the question, right? So, okay. And what I'm going to do is I want to put thousands. Right, and then I'm going to less. Okay, remember we have returned inwards. So sales is returned inwards, so it's 2,000. Okay, so this one no adjustment, so just do it as normal. But just that you have to remember, don't miss out them. Cost of goods sold. Okay. So under cost of goods sold, we have inventory. Okay, as that first over 2020. So which is 6,000, and then we have purchases. Okay, now these purchases, remember there's a drawings of inventory, so please adjust your purchases, right? Okay, minus 3,000, correct? Yeah, from your additional information, yeah. Okay, so our purchases is after you minus 3,000, so it becomes 360,000, and then less return upwards. So let's return outwards. So the return outwards according to the question, which is 2,000, right? Okay, so, alright. So, okay, so minus return outwards. So this is your net purchases. Okay, net purchases plus with opening stock. Okay, plus with opening stock, then less inventory. Plus 30th September 2021, right? Okay, so this one if you minus 67,000, which is under your notes number 1, yeah? Okay, under notes number 1. So this will be your, okay, this will be your cost of goods sold. Okay, so here is your cost of goods sold, right? Okay, cost of goods sold. And okay, now this one is supposed to be a minus number because your sales and the minus your cost, where you actually can get your gross profit. Okay, right. So this would be your gross profit. Your gross profit. Okay, and then after this, so we are going to add other income. So what other income do we have? What other income do we have? So our other income is actually discount received. Right, so there's only one discount received in your notes number 6. So it's 500. Right? Okay. So up. Okay. Yep. So this is the amount, and now less expenses. Okay. So our expenses. Okay. From the list. Okay. So you refer to the question. You can take the goods. Now remember, office insurance. We need to make adjustment. There's a prepayment. Correct. Now, this question is considered not that difficult, and it's actually quite short. This question is actually quite good, not so difficult. Okay, and then the next one, we have salary. Salary is actually no adjustment, so If no adjustment, then we just take the amount. Okay, so say now I need my ruler. Always use ruler, to guide you, especially if you print out your question. Okay, so during exam, last time when I was a student, I always bring two rulers with me. Yeah, one long, one short. Okay, so and utilities we have accrued, right? Remember? Yeah, we have accrued on utilities. So this will give you this number. Yeah. And then next we have, okay, so we can see property, so I'll do depreciation. Right, so depreciation. So depreciation, okay, so this one, okay. So what is your working now? Property is actually what reducing balance method 4%. Right, so this is our cost minus net book value, minus accumulated depreciation times 4%. Yeah, okay. So this is your working. Right, so how much is this? And your calculator, remember to put beside you. Yeah.
9880.
9,880, right? And then the next one, we're going to do office equipment. Office equipment is easy because it's cost. Yeah. Times 25%, right? So this will give you 7,500, right? Okay, depreciation done. Okay, but that's, so I go the sequence from the question here. Okay, perhaps the question say we are going to increase, we're going to write off additional 500. Okay, so please. Right, so this one will be 10,000. All right. Oh, allowance for the debts. So just now I did ask you FTD. So this one is we take 10,000 minus 7,000, and unfortunately it's an increase, so it's actually an expense. Okay, it's actually an expense. So any more? No more? Right? Okay, I think that's all. Okay, so that's so then you get them up. All right, okay, so this is our total expenses, and this one should be a negative number. Yeah, all right. Okay, so so now we're able to get our net profit. Okay, answer is up. So this one put double line. Right, so this is okay. So SOPL already done. You see, here has how many marks? 11 marks. Okay, so basically, of course, when I show you this answer, everything is correct. But just want to let you see how is the marking like. So our marking would be, yeah, my marking would be, so this one. So this is one tick, okay? One tick means half mark, one tick, and this is one tick, then this is one tick, yeah, okay. This one is two tick, you see, because there's adjustment here, yeah. So if you miss out the adjustment, then you don't get the marks. This is one tick, and this one tick, and then we move on to here, right? This one two tick because of the working here, yeah. Okay, this one is one tick.
The working on the left side also count as marks.
Yes, yeah. Yes, so like see this one has marks, this one has marks. So it's two tick. Okay, and this one, right, so this one got working on one here, one here, one here,
Oh, okay.
one here. Okay, but that's also got working on. And allowance for debts also. You see? Quite easy, isn't it? Right? So make sure you do your working. Okay? Make sure you actually do your working. Have to do. If you don't do, then you won't get full mark. But your answer is correct, right? So you can see how we actually mark the question. Okay, next. Any other question? If no question, then we move on to SO. We move on to SOFP. Okay, SOFP, I'm going to put it here. Okay, SOFP. What was that? 30th September 2020. SOFP is SN, yeah? Okay, that's that. This one we can use 2 columns, you know. Okay. So it's up to you how many columns you use. You use up to 3 columns, okay. Yeah, 2 columns, okay. Right? So there's no, it's not so rigid, say that you must have how many columns. Right? Okay. So here we start with non-current asset. Okay, so I'll use short form, but for you in exam, you don't have enough time, then okay lah. I think you will find that it's actually quite packed. Okay, so accumulated depreciation, the question gives you the opening, right? And so we need to plus what we have calculated. So what we have calculated for property is 9880. Okay, so that is, yeah. And for property, our cost is, right? Okay, so this one, after you add the opening accumulated plus the current year depreciation, so and this should be so we are able to get and that's so office equivalent. Okay. But we change the right. Okay. So how much is the accumulated 3,000? 3,000 plus 7,500, right? So in this case, the office equipment is 30. And this one becomes 10,500. Everything. Oh, yeah, so this one. Okay, so how much is our total non-current asset? Total non-current asset is this. 225. Right. Okay, so non-current asset already done. So next we're going to look at our current asset. So for current asset, we will have inventory. Yeah, okay. Now our inventory is actually the closing. Yeah. Okay, so find no adjustment. Then we will have trade receivable. Okay, now trade receivable, remember to make adjustment on because we actually write off further 5,000 as bad debts. So what the question say? So where is the trade receivable? We cannot see the trade receivable. Oh, here, okay, 38 minus 5. So this one we can 3. And then remember what's the FTD? So this FTD is actually 10,000. That the closing is 10,000. Okay, so here, this. Okay, you can see it. And then, next, what do we have? Right? So, for pen, and exactly. No. So, for pen, we have 178. Right? And then cash. Cash is actually cash in hand. So, for cash, there's no overdraft. Only the money in the bank is overdraft. Yeah, all right. Okay, then we have any adjustment? Any adjustment that you need to put here? Oh, prepared insurance, yeah, this one. Right,
Right.
prepared insurance. Okay, so 1,000. Okay, so I think that's all. Okay, I'm going to put on the current asset here. Right. Okay, so here, look at this one. 53282. Okay, so first half already done. Okay, next we go to our second half. Equity. So our equity, okay, what we start with is the capital. Let's add first of all. So this one actually given by the question. Okay, from your trial balance. Okay, then what do we have? We add net profit. Yeah, we did make a profit. Okay, so the number is actually up here. Right? So the net profit is on here. Yeah, right. So net profit is actually up here. Okay. So profit we add loss minus loss. Loss will actually decrease your capital. And what else we have? We have drawings. Right, the drawings. Okay, now in your trial balance, there's one amount, 10,000. And with plus, remember we withdraw 3,000 inventory. Right? Okay, so this one minus 13. Okay, minus 13. Right? Okay, so ended up, we will have this is our closing capital. Okay, so let's say I want to put my number out here. So let's put so this will be my capital, closing capital. Okay. Let's see. I'm trying to put this because I want to label it. Okay. 2021. Right. So next we have. Do you have any long-term liability? Any long-term liability?
Term loan.
Yes, term loan. So long-term liability is term loan. So there's only one item. So straight away we put to the very right column. Okay, then we have current liability on the trade payable, right? Okay, under current liability, so trade payable. So our trade payable, remember just now the discount. So at the discount received, having been adjusted, enter. So minus 500. So this is 2,800. Okay, what else? Anything else? Anything else? Hello? Anda lagi? What else?
I think that's it.
That's it. Accrued utilities.
Oh,
See? This is the problem, no? So if you like that, then you miss out already, no? Okay? Alright, so accrued utility. Yeah. Okay. Right, we have accrued utility now. Utilities which is set 5 to. Okay, so that's all. So, until now. So done. Now this one, how many marks? Okay, let me show you. This one only has 11 and 9. 9 marks. Okay. This my pen tablet is not compatible, not that compatible with this Office 16 216. So that's why it looks a bit ugly when I draw, when I write a bit faster. Okay. Okay, this is half. This is half. You see enough? See so ugly, right? Yeah, okay, and then inventory half. Trade receivable. Okay. Trade receivable, you see here got working, right? So one here. Okay, so one mark for trade receivable. FTD. Bank half. Cash half. Prepared insurance half. And then opening capital half. Net profit. So net profit you know from where, yeah? Okay, and this one also because we're working, so it's 1 mark, so 2 tick. And then 2 row. Okay, this one got working, right? Oh, sorry, this one actually, this one no marks. This one no marks, so it's only half one. Oh, so it's 9. 9 marks. Okay, so it's 9 here. 9 here and SOP is here. I can't see. It's not round. Yeah, so it's not that compatible with my pen tablet. I tried this before. My home one is also initially I used 1.6, so this is the normal. Yeah, and then later I changed to 1.9. It's perfect. So I don't know in use here I'm able to change to 1.9. Okay, so for the theory question, oh my God. Oh, no answer. Okay, in fact should have answer. So you see my marking scale actually is down, but just now I used the tape to show you it's actually answer. Alright, for the theory question, they actually ask about prepaid, right? How do you, yeah, so is that prepaid expenses paid for next year? Correct? Correct, huh? Prepaid means you paid in the next year, therefore it should be deducted from current accounting period. Yeah, should be deducted from current accounting period, yeah? Correct? It should be deducted from current accounting period. So, all right, so accrued refer to expenses owing by the end of the current year. Basically, you need to explain like what is prepared, what is accrued. Then you have to actually explain how do you actually make the adjustment. Yeah, so that's all we want. So actually, you see, it's only 2 marks. So accrued expenses, okay, prepaid. So therefore, it's required to be added as an expense incurred during the year. Okay, still owing expenses owing by the end. Okay, allowance for doubtful debts. How do we allowance for doubtful debt? How do we actually link it to a prudence concept? So you see, allowance for doubtful debts, okay, reduces the amount of receivable the business expect to collect. Yeah, we actually expect to collect less. So when you collect less, basically it's our expenses. Meaning we're actually, so not a good sign. Meaning we are actually having as an expense, it is actually our expenses. So this makes the trade receivable a reasonable amount and not an overstated asset. Yeah. So if you know that there is a possibility, high chances, then we need to adjust our trade receivable so that the trade receivable is not overstated. Since we say that it's a very high possibility that we are not able to collect. Yeah. So if in past history there were customers who ended up not paying their debts, yeah, correct. So we only made an estimate, yeah, but it's at the end really happened, right? And this applies a prudence concept in not overstating, okay, an asset. Yeah. So why we say it's prudent concept, because we do not wish to overstate our asset. Okay, we do not wish to overstate our asset. Okay, all right. So question 1 done. Say we use about 30 minutes. Okay, yeah. So have to work faster, huh? So like I told you, there's a technique. The best thing is you're able to print out the question. Then when you read, you write. When you read, you write. So you tell yourself this one goes to where. Later on, it's like later on become your checklist. Yeah, later on become your checklist. Okay, question 2 I can see is actually depreciation. Yes, the non-current. Now, for non-current asset chapter, what you need to know from the theory part is the revenue, expenditure, and capital expenditure. Yeah, all right. Okay. For this question, okay, question. Let's see, question 2. See, question 2, you see, wow, A, B, C, D, E, part B, A, B, C, D, E, F, G. Wow, so long, oh. Okay, hopefully it's short and sweet that, Okay, now Joyce Sinnerberhard, a book publisher, had purchased a new printing machine on 1st October 2018. Now, please remember the date, 1st October 2018, amounting to 50,000 from an equipment manufacturer. Okay, so only buy one machine, okay, one. Okay, and the printing machine was transported and installed on the day of purchase. So this machine you buy, then you need to actually get somebody to actually deliver to your factory, right? It's a book publisher. Okay, and install on the day of purchase. So transport costs involve 800, while insurance against the damage of the new printing machine while being transported to the business premises amounted to 300. Okay, so now the 800 and the 300 so far, are you going to add to the cost of the machine? What do you think?
Yeah,
Why?
because it is needed to install the machine.
Yes, because if you don't deliver, if you don't have the insurance, then if you don't deliver, you can't use it, right? Yeah, and you need the insurance because it's for a safety purpose. So Joy had to pay 200 to the vendor to install the new printing machine. Now, so the 200 also need to add to the cost of the machine. Why? Because if you can't install, you cannot use. Yeah, right. Okay, so at its premises. So the machine can be used for 8 years and the salvage value is estimated to be 8,000. So this machine can be used for 8 years, so meaning your useful life is 8 years. Okay, so there's a useful life of 8 years. Right? Okay, so the useful life is 8 years. And your scrap value is actually 8,000. So meaning when you want to calculate depreciation, how do you calculate it? First, you must know your cost. Okay, like cost now we don't know yet, but we know our scrap value is 8,000. Correct? Then we have to divide it by divided by 8 years. So then it would be your depreciation. Right? So the question now is how much is the cost? Okay, number A, how much is the cost? So A actually asks for the cost. So how much the cost? Calculate the cost of this printing machine. Okay, I'm going to write the answer here. Yeah? Or you want to? Okay, I'll show you in a proper way. For an exam, you can actually put down and use a table or whatever. Yeah, all right. So I believe you already have an idea how much is the cost. Right? So how much is the cost? So say here we want to find the cost of machine. Right? Yeah, cost of machine. Okay, so title cost of machine. Right? Okay. So cost of machine. So we have invoice price. Invoice price of machine 50. Right, and then we have what? Transportation. So transportation, which is 800. Transportation cost. Then we have insurance. Insurance expense, which is 300. And installation. And installation cost, which is 200. Here we put iron. Okay. So add them up. So this is your answer, right? So this is your cost of the machine. 551,300. Okay. Yeah. So here how many marks? 2 marks. So 1, 2, 3, 4. 2 marks lah. So half mark each lah, meaning. Okay, like this. Right. So here is 2 marks. So 1, 2, 3, 4. So 2 marks. Huh? All right. Okay. Next part is okay. No problem. Yeah. Okay, next. Calculate the depreciation of the above machine on a straight line basis for the above machine. Okay, straight line basis now. Actually, I already put down the okay. It's actually your depreciation is actually because now you already know how much is your what, right? How much is your cost? Right? Cost minus 8,000, correct? And divided by 8 years. Divided by 8 years. Remember the formula? The formula for yeah. I can't use if at home I can use pen drive, but here I can't. Okay, so how much is your depreciation?
512.5.
Yes, correct. Yeah. So your answer is 541 okay 12.5. Yes. All right. Okay. 5412.5. So this one mark. Yeah, 1 mark. So working 1 mark, your final answer 1 mark. All right. Okay, number 3. Oh, why got 2B? Calculate the depreciation and net book value for the above machine for the years ended 30th September 2021 using the reducing balance method at 20%. Now this one is remember in the lecture, in the tutorial, reducing balance method. How do you do it? You do it in a table, right? Okay, so here ask you to do for 3 years. Now you see this is you start from here, so meaning after 1 year, this is your first year, second year, and this is your third year. So meaning do for the first 3 years lah. Yeah, okay, do for the first 3 years. Okay, so we are going to do this reducing balance method. Okay, yeah, for 3 years. Okay, so first you start with cost, right? So how much is your cost? This number, right? Okay, then you have to start with your depreciation. Now remember, first year is depreciation, right? Okay, so first year basically reduce cost because first time no accumulated depreciation to minus. Yeah, all right. Okay, so this is your first year depreciation. First year depreciation is basically just like what lah? Just like using straight line method. Okay, so this is your answer, right? Okay, so we minus, right? Okay, so we actually get yeah. So this is your net book value. Okay, so this is your net book. Okay, this is your net book value as at 30th. Right, 2019, correct? After 1 year. Okay, so your net book value, right? September 2019. Okay, now Then the following year, we need to look for 2020. Also, we need to find the depreciation, right? So depreciation. Okay, so this time depreciation, we actually based on our net book value, right? 4 net back times 20%. Right, okay. And this is so this is your net book value. Okay, asset here 320. And follow or not? So Bill, are you okay? Can?
This one okay.
This one can, right? Okay, so
Yeah.
now we have done second year. Now we have another year, 2021, right? Okay, so again, last depreciation. So this one will be 32 at 32, okay? It's 20%. Because we use net book value, okay? So here, this one times 5.2. So it's 6566. So this 6566 is basically the number. Okay, so this. So that's all we need to do up to 2021. Right? Okay, done. So this one how many marks? 3 marks. This one has 3 marks. Okay, so 3 marks, so meaning right? Okay, okay, 1, 2, 3, 4, 5, 6. So it's 3 marks. Yeah, half mark each. So it's 3 marks. Okay. So far, so good. Can you follow?
Okay.
Okay. Now
Okay.
then the next one. The next one we are going to do. Let's see. Done. Okay. Prepare accumulated depreciation account for the 3 years based on the reducing balance method. Now this one actually reducing balance method. You already have the number, right? So what you do is you just prepare a T and then you just copy the number from your part C. Copy a number from your part C. Yeah. Okay. So how to do accumulated depreciation account? They only ask to do accumulated. You need to do. I skipped already. You need to do depreciation and accumulated actually. So you look at your see, prepare depreciation. Okay, this one. This one prepare depreciation account. This one prepare accumulated depreciation account. Yeah, for the 3 years based on reducing balance method for the 3 years. Okay, so we can do these two together lah. Right, because they're actually interrelated, huh? Okay, so this one I'm going to not too far because I want you to see the number. Okay, so this one. So I want you to see the number, huh? So put like this. So this is the depreciation. Okay, so now for depreciation is an expense, and this one is always happen in 2019. So this would be 30th September. Okay, this is the problem when I want to put down the. Oh, I put. So it's actually quite troublesome when you come to the date. Okay, just look at this. So this will be 30th, right? Yes. So we have we put accumulated depreciation. Okay, what is the amount? See, I can copy the number is just at the side there. You agree with this number? Right now, first year depreciation. Yeah, first year depreciation. And first year, right? Okay, so here we're going to close this account. First year. So this will be SOGL. Right. Okay. Then we go to second year. Now, so you see, okay, I do one year by year. See this one, the double entry. You see here accumulated, so it will double entry to here. Yeah, okay, double entry to here. So of course this would be year 2019. Right? Okay, so this one is 30th of September. Yeah, okay. So this is the depreciation. Okay. Right. And then it's 2019. Okay. Okay. See number, so it is balance. Right. Okay. Yeah, correct. So that's how correct. So we basically this account is actually closed. This is also closed. Yeah. Okay. This one also closed. So this is your first year, and then this one you bring forward to the second year. So this is your first October. So first October here we have the balance, right? Balance BD. Yeah. Okay. So 1, 2, 3. Okay, like this. Right. Okay. Now, then we go to our second year. So second year again. Okay. We have 30th September. So again, but this one this time how much? 8208. Correct? 8208. Okay. Then when we come to here, it's also the same. This one we can copy. Yeah. Oh, this one is here 2020 already. Okay. And 8208. So this is a expenses account. So actually you just close it. Yeah. Okay. So pause to SOPL now. Okay. Again, the double entry. Right. Again, the double entry. So you can see here. Come to right? Okay. This one will be here. Correct? Okay. So we're going to put here is for here, September. September. So here we put so the amount is actually of it, right? Okay. Okay. So 19, 20, 23. Okay. So this one you need to plus. It's not that. Okay, this amount, right? Okay, so this one would be it will take you some time now because you need to draw the okay. So here we have the amount. So, okay, now one more year, 2021. Again, the depreciation. right? 6566, yeah. Okay, this one I forgot. This one we should put this. You see the problem or not? I think I put the wrong. This one should be 19. And here I should have. What is it? Okay. Here is 2020. Oh, here is 2020. And this one, the date should be 1st October. This is 2021. Okay, so this is actually drop right down for 18468. Yeah, all right. Okay, now, so this one is the current year, huh? Yeah. Current year? Okay, so this one is depreciation. Yes. This number here will come down to here. Yeah, double entry. So this one will be 2021. Okay. But here is September. 566. Right. Oops. Okay. Okay, so here will be 2021. Okay, 30th September. And then CD, right? Okay, so now this one is see accumulated, so the amount is getting bigger and bigger. Right? Yeah. Here, you close your account. So 5 Okay, done. Now, of course, this one you can bring down. So this one first October. Right. Okay, and then CD. 2543. So this one is 2020. What happened to this? Okay, now, any problem? Okay.
Can
Depreciation and accumulated depreciation. So accumulated depreciation, as the years go by, your amount is getting bigger, and then but your net book value is getting smaller. Is that correct? Okay, one more part. One more part from here. Now, this one, prepare relevant extract of the SOPL and the SOFP as at 30th September 9, 2021. So this one is asked you to prepare SOPL and SOFP. Yeah, extract meaning partly like you only show the depreciation part for these 3 years. Okay, for these 3 years. Right. Now, so this one you got to figure out how you don't have to prepare 3 years, right? You don't have to prepare 3 SOPL, 3 SOFP. What I do is I only prepare one. Okay, I only prepare one, yeah. Right? Okay. Right. I'll show you how to prepare for. Okay, so SOPL, for example, right? So here we need to put extract. Okay, for the year ended, okay, now we have 3 years, right? So here you put 2019, 2020, and 2021. That is, okay, yeah, and then, cross this one, okay. So now in your SOPL, recipe is under expenses, isn't it correct? Yeah, so your depreciation is under expenses. So you put out how much is your expenses? How much is your depreciation? Okay, in 2019, 2020. Right? So yeah, that is. And this one here, okay. Graphic 6. So this is what you are going to put into your SOPL, isn't it? Yeah. Okay. So that's how you present your answer. So it's very simple. So remember this format now. You can actually use it now for your exam. So
Miss,
yes.
we use the reducing balance, not the straight line.
Did the question say? What did the question say? This one could stick to the question. Now the question did not say. It did not say straight line or reducing, right? It said prepare relevant extract SOPL FP relating to the printing machine.
Using don't we don't use the reducing.
If you don't use reducing, you use straight line.
We use straight line, right? For this question.
No, for my answer is reducing.
Oh.
Actually, this question should be more specific. Yeah, it should be. You should actually say using reducing or straight line. But my answer is actually reducing.
Oh, okay.
Yeah, right. Okay. So now, so it's reducing, right? Okay. So this one. So here there's 1.5 marks. So how do you get 1.5 marks? Is because of this one. So there are three numbers here, right? 1, 2, 3. So 1.5 marks. Okay. So SOPL. Okay. Now for SOFP. Okay. For SOFP. For SOFP. Right. So extra. Expect the figures. So same thing. Okay, we repeat the same thing here. Put like this, huh? Oh, huh? Copy everything. Yeah. Yeah, right. Okay, so here now in your SOFP, it's basically the non-current asset, right? It's actually your non-current asset. So space, I'll put this. It's actually a non-current asset. So we put here, which is our machine. Okay, and here we can put less accumulated depreciation. Okay, so the cost of the machine is actually the same, right? Yeah. Okay, so this three number is actually the same. What I do is I just copy and paste. Okay, and accumulated depreciation is the number from here, isn't it? Yeah, your year. Yeah. No, accumulated depreciation is you're going to copy from your accumulated your accumulated account here. So basically the number that you use, okay, for 2019 is this one. Okay, sorry. It should be okay. We should use balance CD, okay? This one. This one. Correct, huh? You see here, do you have 3 years? You have 3 years, right? 2019, 2020, 2021. Yeah. So these are the number, the three highlighted one is actually your accumulated depreciation that you're going to put into your SOP. It's actually your balance CD. Okay, it's always your balance CD. Right, okay, so correct, you think so? Okay. So here is another 3 marks. So how do you get the 3 marks? Okay, we show you. Okay, that is 1, 2, 3, 4, 5, 6. So half mark each, so it's 3. Okay. Okay, can we stop for a toilet break? Yeah. So for toilet
Okay.
break,
Okay.
yeah, okay. So about 5 minutes. Because if I want to go to the toilet, it's quite a distance here. Okay. I'll see you. Then we continue, yeah?
Okay.
Okay, can we continue?
Yeah.
Right, this one, okay, so part A, 2A, any problem, depreciation?
No.
Okay, yeah, if exam come out question like this, can do or not? Can, right? So have to be
Can.
careful
Can.
lah, huh? Can, huh? So remember, huh?
Miss, for
Actually,
the E,
Mm.
the another one more tick from where? Because just now just 4.5 on in the
so I
Excel.
did not show you. Oh, I did not show you this one more. Depreciation account. Yeah, okay. Show you this one. The A, you say one tick. The straight line basis, is it? I think I show you all except for this one, the depreciation. Okay, so for this one, from here, so it's 3 marks lah here, right? Okay, 1, 2, 3. So this one is as well. See, it's so ugly. Cannot write, cannot, very difficult to draw around. Okay, and then the balance CD, 1, 2, 3, and then here, depreciation, opposite, okay. And then here, and then here. So 1, 2, 3, 4, 5, 6, 7, 8. So here is 4 marks. Right, so I show all the marks already. Okay, there's 1 mark here from here. The 1 mark is actually this one, the working 1 mark, and then the answer and mark. Another one, so there's 1 mark here. This 1 mark is actually this one. Okay.
About the one, the E, the last one.
The last one.
The one. Because just now only like seven tick only.
7 tick. This one?
No, down there.
Right.
This one.
1.5, 3. Yeah, this one is manual 1.5. Oh, okay. There's another half mark, right?
Yeah.
Okay. You're asking about this one, see? Half mark for good format of SOPL and SOFP, half mark. Okay. Yeah.
Okay.
Right. So now we continue. Oh, this one is actually ask you to differentiate between capital and revenue expenditure. Yeah, so for this chapter, capital expenditure, revenue expenditure, you must know. So you see, this past year actually tests you how to differentiate. They'll give you the scenario and they ask you whether it's a capital or expenditure. So another way is I can also ask you to explain what is capital expenditure and example, what is revenue expenditure and example, isn't it? Right? Okay, now, so higher charges for a lorry to bring the machine to the factory before installation. Higher charges, hiring charges for a lorry to bring the machine to the factory before installation. So what's your answer? Capital or revenue?
Capital.
Yes. Okay, so I put the answer here. Huh? Okay, so this is capital. Capital, huh? Agree, huh? Both of you? Okay, now how about this one? Purchase cost of office equipment for staff to perform work. Purchase cost of office equipment for staff to perform work. Meaning, they actually buy office equipment. So, what is this? Capital or expenditure? Capital or revenue?
Capital.
Yes, capital. Because this one we write aside. We buy asset. Can we actually buy asset? Huh? Yeah, office equipment. Office equipment can be what? Typewriter? Right, correct? What? Laminating machine? Yeah, so it's actually capital because you buy asset, non-current asset. Okay, how about this? Rental paid for the first quarter of the year. Rental.
Revenue.
Yes, this is revenue. Annual insurance premium paid for business insurance.
Revenue.
Revenue. Okay, how about E? Installation of a new smart air conditioning system in place of a normal air conditioning system.
Capital.
This one is capital. Yes, because you actually replace the new one. Right, install a new smart air in place. Yeah, so you install a new one. Okay, so this is capital. How about this one?
Capital.
Yeah, capital, because this is part of the cost of the machine. Okay, part of the cost of the machine. Import duty. You don't pay import duty? You can't even take it out from the pot. So part of the cost of the machine. Okay, cost to buy oil for maintaining a machine.
Revenue.
Yes, right. Okay, so well done. So basically, why cannot type one? I can't type on. Don't tell me. Oh, a bit hang like that. Okay, so revenue. So, okay, not difficult, right? 7 marks.
Yeah.
Question 3. Oh, this is also in your what? In your under your exam tips, right? Okay. Now this one is quite receivable. Okay, let's see. What is it all about? Okay, what do you need to do? So I always love to read the requirement first. Oh, there are 3A and 3B. Okay, we look at 3A. Calculate the amount of allowance for doubtful debts. Okay, you are asked to calculate the amount of allowance of doubtful debts, AFDD, for the years ended. Okay, years ended. So meaning 2019 to 2020. So meaning 3 years lah, 19, 20, and 2021. And prepare the allowance for doubtful debts account for the 3 years. Oh, so I need to prepare the account as well, also for 3 years. Yeah, calculate and then prepare the account for the 3 years, so 6 months. Prepare relevant extract of the SOPL, SOPL and SOFP. Yeah, for the 3 years relating to the above. Okay, also 3 years, right? Now, so here it says, this trading prepares its financial statement annually to 30th September. So the closing is 30th September every year. So meaning your first day is 1st October and your last day is 30th September. So the accountant has estimated the following allowances for doubtful debt based on the past history of the following years. Okay, so this is what they have calculated. Okay, so the business has a balance of 1,006 on the allowance of doubtful debt account as at 1st October. Now, this is actually the opening. Okay, the opening. Now, I don't know whether you do you feel a bit confused? Here like this. So, okay, so you see now we start from here, right? Okay, so 018. 018, right? The same September 201. This is 1 week. And then okay, I just list down. So if you find that it's a bit confusing, so put down this. Okay, can you see the picture now? These are the 3 years that we are talking about, isn't it? Correct? So you see the question give you 1st October 2018, so meaning this is the opening, then you are asked to actually do the closing. And the question say we do 3 years, right? So these are the 3 years now. So put down the date like this in exam if you find it's a bit confusing. Yeah, normally if it's not start from 1st Jan, it will be a bit confusing. Okay, so year ended, so you see 3 years, year ended, trade receivable. These are the trade receivable at the end of every year. So the management decision for each year was as follows. Okay, so we look at now, 1st year 2019. Based on past history, the management has set the allowance for doubtful debt at 5% of trade receivable. So for 2019, it's 5%. Yeah, okay, so 5%. So meaning if you take 2019 is 50,000, right? So you add 5%. So how much is this? You take your 2005. 2005, right? Okay, so now, so you see your opening is 1,006, is that correct here? Yeah, opening is 1,006. Yeah. Yeah, so your opening is 1,006, right? Okay, and now your closing is 2,005. So it is an increase or decrease?
Increase.
Yeah, there's an increase. So this one is an increase. Increase. And, increase in the FDB, correct? So it's 2005 and 2006. Yeah, all right. Okay, so this one is yeah, okay. So this one is 1 year. Okay, how about year 2020? The management decided that since this year's economy was not good, the allowance for doubtful debt will be increased to 6% at trade stable. Okay, so it's 6%. So meaning, so it's 6%, then it will be 60 times 6%. Right? Okay, so this will equal to 3,006. Yeah, 3,006. Okay, then here, this right here, this one. So here, okay, now, so this 3,006, you need to compare with
2,500.
yeah, compare with 2005, right? So meaning it's still an
Increase.
it's still an increase, right? Okay, it's still an increase. But this time is we compare the 3,006 compare with 2005, right? Okay, so it's also 900. Also 900. Okay, now how about 2021? The management decided that this year's economy had further declined compared to last year. So the allowance for doubtful debt is increased to 7%. Ayo. Increase some more. Okay, so increase some more. So 70 times 7%. So it come out to be 4,000. Right? Okay, and then here we are going to increase. So now this one increase in FTD, is it still increase or decrease?
Increase.
So it's comparing
Compared to 3,600.
yeah, comparing yeah, so now we are comparing 4,000 yeah, minus 3,006, right? Okay, so it's an increase of 1,003. Okay, now we already have the number. So calculate the allowance. Yeah, so I already done the calculation. Then prepare the allowance for this account. Okay, so I'll show you. So the calculation already show you one. So actually all the calculations actually this one now. Okay, okay. this one, okay? This one and this one, right? Okay, then now we're going to do the allowance for doubtful debts here. Okay, oh, this one I should have draw again. Allowance for doubtful debts. 1, 2, 3, 4, 5. So FDP, huh? Okay, FDP account. So from here, we're going to start from end of year, first year, which is 2019. So meaning FDD, we have an opening. Yeah, we have an opening. So let me put our opening. Okay, so this one. Okay, opening up. So it's first October. So this one is balance BD. Okay, balance BD, which is 1006. 1006, right? Okay, then at the end of the year, 2019. So here would be September. So 30th September, this one is supposed to be our balance CD. So we calculated 2005, right? And we compare with our opening. So meaning, okay, so this one. So this one will be what we call it, doubtful debts. Okay, doubtful debts, so I put DD. So DD is 900. So well, if you put this side, so meaning it's an increase. Okay, it is an increase. Yeah. Here it is 2019. So this one will be 1st October. Okay, yeah. 1st October, so balance BD. So it's 200, right? So another year, okay. Now then another year here will be 2020. So this one is just remember again. And the balance sheet. Now again, at the end of 2020, increased to 6%, and trade receivable is 60,000. So it's 50%. Okay. Okay, so here 2020. So here we put 30th. So this is double that, right? Okay. And another 900, right? 3006. Oh, my maths has a problem. See, this one is wrong. Why you keep quiet? This one you keep quiet. This answer is actually wrong, you know. I dream, you also dream. Okay, so 1001, huh? Right, okay, so yeah, 1001, right? Okay, so yeah. Okay, yep. Can I? Right. Okay, then another year. So this one we brought down now. So first October. 3006. Yeah. Okay. Then we are going to do another year. So 30th September. Okay, and this one increase again, 70,000 to 7%, so it's 4,009. 4,009, right? Okay, and then here, another year, so September. Space. After that, so this one will be 1,006, 1,003. 2003, we do first 4,009. Yeah, correct, no? And of course, you can bring it down. First, over. 3, 4, 7. Okay. So the marks, right? Okay. Just now the working here. This one, right, that I highlighted. This one is actually one tick each, one tick, two tick, three ticks. So here got 3 ticks, right? And then plus, and we continue from here. Okay, and here will be this, and this. Yeah. So 9 plus just now 3, so it's 12, so it's 6. Okay. Yeah, the 3 tick, is actually from here. So 1, 2, 3, and then plus here 9, so it's 12. Okay, so it's 12. Yeah. So it's 6 marks. So 1 tick mark. Okay. Okay, next. Are you okay?
Okay.
Ken?
Okay, this.
Ken, okay. Right. So extract of SOP and SOFP. Okay. This one extract. This extract actually we already done it. This one. Like this, but this one we do for depreciation. But of course, this round we do for allowance for that stuff. Okay, so okay, right, expenses. Okay, now this one our expenses is actually increased in the that check. It's increased now. So for 2019, how much is the increase? 900, is it? 2020? 2021? This. Yeah, okay. And then, here, and for this one, here it should be, current asset, and this one should be trade receivable. So our trade receivable 50, 60, and 70. Right, okay, and then we less what? We less the FTD, right? We less the FTD. So our FTD, you actually take all the balance CD, yeah, all the balance CD put into your SOFP. So 2000 minus 2005 minus 3006 and minus 4009. Okay. Okay, done. All right, so marks allocation. Okay, so this is 900. 1, 2, 3. And then here. So here is 4.5. Is that right? 9 tick. So half mark each, so it's 4.5. Okay, and so 10.5 here. Okay, now then we have okay. Any question? If no, we move on to question 3B. No, okay. Question 3B. Okay, question 3B, identify the errors made in the sales ledger. Okay, sales ledger. And in the trade receivable control account. Yeah, so you're familiar? This is actually your part of the current group of entry, right? So sales ledger is actually the individual trade receivable account, and this is a control account. Yeah. Okay, so can you identify any problem here? Can you identify? So that's why here they actually ask you to identify the errors made in the sales ledger account. Okay, the following are the business transactions for Quaker Trading, a stationery shop. Okay, so what happened is this is in the month of September. Sale of staplers of 1,000 on credit to Able Plantation, invoice number 101. Able Plantation, so this one sells 1,000. Correct now? Yeah, correct, right? Okay, right, and then sell of printing paper, 2,000 on credit to the cheese store. Okay, here. Debit trade receivable credit sales. Wait, is it correct to put in the credit side? This one is it correct to put in the credit side?
Oh, wrong.
Oh, no, right? Okay, no. So it should be debit trade receivable, credit sales, isn't it? It should be debit trade receivable and credit sales. Yeah, all right. Okay, so this one is wrong, really wrong. So okay, so this one is wrong. Okay, so this one is wrong. And how about this one? Sale of printing paper. Sale of printing paper, this one also wrong, huh? Isn't it? Same like this one, it should be on the debit side, huh? Okay, this one should be on the debit, not on the credit. So the one that highlighted is actually wrong. Okay, return of goods 200 by Able, credit note number 1, return. So the return should be on the credit side, right? Yes. This one also wrong. Right. The balik lah, return should be here on the credit side. Okay, and return of goods and balance sheet credit. This one also wrong, huh? Right? Return should be on the credit side. Huh? Okay, here because you debit return inwards, you credit other receivable. Yeah. So okay, the highlighted one is actually wrong. And then what? Payment of 800 by cash from Able Plantation. So when Able pay cash, this is correct or not? Able pay. Debit cash credit rates. This one is correct. Yeah, okay, this one is correct. Right? Okay, so okay, this one is correct. So I put a tick now. Okay, this one is correct. Okay. Then we see payment. Okay, payment of 1,002 by check from Renchi. So this one also correct, yeah. 8.2. Okay. Right. Yeah. So correct, this two. Okay, then you look at your track, this receivable. Yeah. Is this correct? So now we identify 4 errors. Actually, there's 3 errors. Oh no, 5 errors. So is there did the question say shop? Do you think you have opening balance? Do you think you have opening balance?
No.
No opening balance now, because the question did not give us opening balance. So then how come this one there's an opening balance there? This one, the BD. This BD 3,000 is actually, yeah, I think this is wrong, right?
Maybe from other trade receivable.
No lah, so yeah, I think this is actually wrong. So, highlight. So this is actually wrong. Yeah, it's not balance BD lah. Okay. Cash, okay, now you see, right? This trade receive, okay, it's actually these two plus together. Able Plantation plus Renchi, the amount will come to here. Yeah, the amount will come to here now. So you see like here cash, right? Cash, meaning this 800 have to put here 800. This 1,002, 1,002, correct. Okay, so if you really look at it, right? Okay, this is correct. This is also correct. Okay, and then but this one is wrong. Return inwards. Return inwards is actually wrong. Return inwards should come to. Return inwards is wrong. So return inwards should be. So this goes back. Yeah. So the correct one you can copy and paste, but the one that highlighted you go to make adjustment. Yeah, you need to make adjustment. So it should look like, so you say error number one, your sales should be on the debit, right? Okay, so this one should be on the debit, this one should be on the debit, this one should be on the credit, this one should be on the credit in the same account, but this one should be debit, this one should be credit, isn't it? Right? Okay, so if I put this, so yeah, okay, so I put the so this one should be on the debit. Okay, and this one should be on the credit side, right? Yeah, so the other way around. And same goes here. This one should be on the debit, and this one should be on the credit. Yeah, okay. And then this one should be on the credit, right? And this one is actually is not. This one should not be is not as balance BD. It should be sales. It should be sales. Meaning it's actually this one. These two debit plus together. The 1,000 plus the 2,000. So it should be sales. Yeah, we should actually put sales 3,000. And this date should be 30th. This one should be 30th. That should be 30th. All right. So of course, here you have one call return inwards. You have one call return inwards. And how much is your total return inwards? So you see 200 plus 800, so it's 1,000. So, okay.
About the sales,
About the,
sales,
uh-huh.
it's not recorded in the trade receivable control account on the credit side.
The sales actually, no. Okay, the sales actually goes with sales account.
Oh,
Yeah, it should be, it should goes to actually the sales account. Okay, now, so if I want to save some time, right? Okay, I use, okay. So basically, right? Okay, now, this here, because I think type is very slow, so I use this one to show you. Okay. So this one is your trade receivable control, right? Okay. So this one is able, and this one is actually Ranchida. Okay. So you see, at first we have sales, right? So here is third. So we put sales here, which is 1,000. Then we have return inwards. Okay, the date you can copy from the question. Return inwards, and there's a payment. Right. So this account actually closed. Now on Renqi also the same. There's a sales. Okay, we sell to Renqi 2,000, right? And then there's a return inwards as well, 800. And then there's a payment of 1,000. So see these two accounts actually closed. Now when come to control account is actually these two individual account plus together and put here. So you see, so here is on the last year. So here's sales. Your sales is actually the 1,000 plus the 2,000, so it's 3,000. And then you have return inwards, right? Return inwards also the same, 200 plus 800, so it's 1,000. And then, okay, then we have cash 800. Then we have bank, okay, 1,002. Okay, what I mean? It's in fact the two trade receivable plus together. Yeah, so you see this one also balance, right? 3,000. Understand?
okay.
Okay, yeah, so it's actually the individual control account is actually total from, let's say you have 10 trade receivable, you actually total up the 10 trade receivable, then you put into your control account. Okay, yeah, like this, right? Okay, any question? Kevin, are you good? Kevin, are you
Yeah,
good?
when they ask trade receiver, do we also
Ah.
need to list the we need to list everything and then the trade the control account also.
Yeah, because the question asks you to identify the areas from these three accounts. So I actually now I show you the right answer. So
If they don't
so
specify the control account, do we still need to put it there? They just
actually the question want you to tell which one is actually error. Which one is actually error? The question want you to tell. The question want you to identify which one is the error.
okay.
Yeah, okay. But this one is I show you the right answer. This is supposed to be the correct answer. So if you look at this answer and the question, so you find that sales and return inward should be the other end, the terbalik, right? Sales and return inward, the terbalik, right? And then this one also, sales and return inward, the terbalik, right? And because trade receivable, actually there's no balance BD. It should be the sales. Right? There's no balance BD. That should be the sales, right? And here you have you should put a return inwards. Okay, can we move on?
Okay.
Right. Wow, let's see this question 3. So for the following scenario, identify the appropriate journal entries. Oh, okay. I love journal entries. Right now, so okay, come, let me show you the answer here. Just now your part B, right? The errors, one error, one luck. It's actually one errors, one luck. Okay, it's actually one error. Right, so for the following scenario, identify the appropriate journal entry. So a motor vehicle experiences wear and tear in the course of its service to the business. So what is your appropriate journal entries? Appropriate journal entries. A motor vehicle experiences wear and tear in the course of its service to the business. So every year there will be wear and tear. So meaning you need to provide
The depreciation,
Yeah, so okay, what is your double entry for depreciation?
the debit depreciation,
Okay, debit depreciation.
credit accumulated depreciation.
That's good. Yeah. Okay, so this is your answer. So you don't have to calculate. Just show just show the journal entries. Right. So this is your answer. 1 mark. A customer faces financial problem. A customer
Oh.
faces financial problem. So
Debit doubtful debt,
okay, debit doubtful debts, credit.
credit allowance of doubtful debt,
Allowance for doubtful debts. Or this is two answers. Or another one. Okay, this one is not confirmed. What happens if confirmed? The customer really have financial problem. David?
bad debt,
Yes. Okay, very good. Ready?
trade receivable,
Yes. Right? Okay. So either one, either one. Your answer is either one. Okay, either one. It's one mark, one mark. Okay, so one, okay, now. So no problem, yeah, this one? Okay, part D. In order to keep track of inventories, there are two common methods. Compare and contrast the two methods. What are the two methods? Inventory. What are the two methods that you learned? What are the two methods that you learned?
weighted average,
Weighted average and
first in, first out.
so this one you need to explain now. I can show you. See the answer? Error 1. Sales is entered on the wrong side of both the T accounts. It should be on the debit side. Yeah, sales actually enter the wrong side for both. Return inwards also wrong side, right? Other receivable should not be the account title. Yeah. See, you cannot put other receivable here. You should put trade receivable, right? Yeah. Okay.
Oh.
And the date for entries into the trade receivable control account should be at month end 30th September. Yeah, should be month end 30th September. So this one, see? receivable control account is actually at the end of the month. So all the dates actually on the last day. All the dates actually on the last day. Right? Should be on the last day. Yeah. Okay. And the 3,000 should be a sales entry rather than a balance brought down from last month. Yeah. Okay.
Okay.
Okay, so you can snap and keep this answer, and the correct answer just now I already shown to you like this. Right? And part D. Part D said compare and contrast that. Okay, first in, first out. First in, first out, when used in a manufacturing business, raw material used in production are taken using the earliest price, yeah, outdated price, which is unrealistic when setting the selling price of the finished goods. Yeah, so you always use the old because the old one come out. You need to utilize the old one first, or you need to sell the old one first. Yeah? Right? Okay. During inflation, first in first out values closing inventory at the latest price. Your latest means the price is higher. Okay, which tend to understate cost of sales and hence overstate profit. Right. So the higher your closing stock, the higher will be your profit. Yeah. So your closing stock, your closing stock overstated, your profit overstated. However, your cost of sales is understated. Isn't it? You know why your cost of sales is understated? Because okay, I'm not sure whether you are able to relate to this. So it's actually the idea is actually like this. So because we have opening stock plus purchases minus closing stock, right? So you see, this is minus, meaning the higher, the bigger the amount that you minus, the smaller will be your cost of goods sold. Agree? Yeah. So if this is higher, this cost of goods sold will be lower. Agree? Because you minus one. The higher your closing stock, the lower will be your cost of goods sold, right? And then, okay, now when your cost of goods sold is low, what happens to your net profit? Profit will be higher. Okay, so now if you use first in first out, so meaning if you use first in first out, okay, basically your price is the latest price. So in this case, so that's why here it says basically you overstate your profit, which is correct, and you understate your cost of sales. Yeah, like what I told you now. Because your closing stock is actually the latest, so meaning the price is actually higher. So, okay, what happened with WAC, weighted average? Weighted average will minimize the variation in the value of raw materials issued to different production jobs. Yeah. So even though they are issued from different batches of purchases, so it will smooth out cost of production and cost of goods. So if you use weighted average, then there won't be, you won't see like your closing stock won't be overstating, and your cost will not be understated. Okay. Now, this part D, I would say a little bit difficult for you, but anyway, it's only 2 marks now. Don't worry. If you don't know, I never mind. If you don't have enough time, and you can't figure out what answer, just leave it because it's only 2 marks. Okay, just leave it, right? Anyway, this is the answer. Okay. And we still have one more, right? Part E. Oh, super long. Okay, so we have part E. Are you okay with this? Can I move on to part E?
Okay.
Okay, so for part E is this one. Now, what is the value of the closing inventory as at 30th September 2021 if the first in, first out method of inventory valuation is applied? Okay, so they ask you to use first in, first out. Yeah, they want you to actually use first in, first out. Okay, yeah, they want you to use first in, first out. Right, first in, first out method. Yeah, okay. Valuation is applied. So also calculate the cost of goods sold and purchases for the month of September 2021. So ask you to find cost of goods sold and the purchases. Okay. All right. Yeah. Okay. So 6 months. Okay. So we're going to calculate the. Okay, so this one you need to use the table. Then you use table. Okay. So this one we I think we start with the new worksheet. Okay, so you still remember how to figure out your table? Okay, so let's start from here. So wait, right? Okay, and then we go to units. Yeah, that's the price. And then it's going to okay. Range. Right, so this is the date here. Okay, so we're going to start now. So we're going to start 1st September. Okay, 1st September, according to the question. Let's show this. Now, Loot has business selling trays of eggs. As at 1st September, Loot had 30 trays costing 9 each in the store. The following movement occurred. So this is the following movement. 5th September sold 20 units sold, 40 units bought, and 32 units sold, and with a different price. Okay, so let's see. So meaning this one, this is actually our opening balance, right? Yeah, this is actually our opening balance. Right? The opening balance is here. Yeah. Okay, this is actually our opening balance. Right? Yeah. Okay. So opening balance, so we need to put, sorry, put first September. Okay, opening balance is actually here. So we have 30 trades at 9, so it's 207. Right? Yeah, position at 9 at 270. Actually, this one, right, if you want to be easy, right, you can actually set the formula. So this one, and this one. So later on, we actually have to calculate. Oh, okay. So this is the first opening balance already done. Okay, opening balance done. Yeah. Okay, next is 5th of September. So what happened 5th of September? We actually sold out. Right? Yeah. We sold how many? We sold actually. We actually sold 20. Okay, so up. So we put on the up. So we need 20. Okay, 20. So you check the price. How much? The price is 9. Just 9. So this one. Yeah, okay, the price is 9. Right, so we check in 9. So after you sold 20, this one left how much? I don't know, how many? 10, is that correct? 30 minus 10, and the price is still 9. Yeah, the price is still 9. So, yeah, formula. Yeah, all right. Okay, so we done on, yeah, we actually done on this, yeah. Okay. 20 out, so left 10, 10. Okay. All right, and then next is what on the 11th. On the 11th September, we actually bought. So we bought how many? 40, yeah, question. And the price is 10. Yeah, okay. So in this case, then how much is that? So it's 400. Okay, so in this case, 400, right? So here we can brought down 10, 9. Okay. So meaning then we have, because it's different price, so we cannot put them together. So here we put 10.
So means if it's the same price, then can mix up.
Yeah, if you same price, then you can mix, but because this one is different price, so better don't mix one. Like this, right? And okay, like this. Okay, then after 11, then we look at 18. Okay, 18 September, what happened? 32 sold at 10.50. 32. Right now, 32, huh? But first thing first out, meaning we need to clear the 10 first, right? So you put here 10, 9, right? Okay. Yeah. Okay. Now, you saw what 32, right? So you must take the 10 out first. First in first out. Then the remaining 10, okay, then the remaining is 22, right? 22 at 10. Is that correct? The 9 one already finished, no more. Okay, so in this case, how many left? How many left?
18
Yeah, 18. So 18 at
and 10. 10.
okay, so finish one. Okay, but there's you need to answer the question now. So the question actually asks, the question actually did ask, what is the, right? The question actually asks, all right, so how much is your cost of goods sold? How much is your cost of goods sold? The question asks cost of goods sold, right? Yeah, okay. So here, how much is our purchases, cost of goods sold, and closing inventory? So, okay, so here is our purchase. So how much we purchase?
Uh, 400.
And we purchase 400, right? And then here is cost of goods sold. So how about cost of goods sold? Cost of goods sold, okay, just add them up now. Right. Okay. Add 493, right? And how about this one? This is your closing stock, right? Closing inventory. So closing inventory less the remaining closing inventory. You don't go and add, huh? How much is your closing inventory?
180.
How much?
180.
Yep, 180. Yes, 180. 180. Okay, can you see? So all the answers out. Ah, so you have to understand the one that goes out is actually your cost of goods sold, and the selling price, yeah, and the selling price is not important. Because now they will actually tell you, oh, sold at 9.50, sold at 10.50. No, don't put your selling price in this table. This table is only on the cost. Yeah, don't put the selling price in this table. Yeah, we ignore the selling price. Okay, if you want to know how much we have actually sold, so let's say I ask you something additional. How much is your sales? So your sales is, this one I'm going to refer to your question. So your sales is 20 times 9.5. Yeah, and the other one is 32 times 10.5. This is your sales. This is your sales. Right now. Yeah, because that's what your question tell you. This is your sales. Your sales is 526. Can you understand? Okay.
Okay.
Right? Can I? Okay, then we need to go for for the break, question 4 is actually really short. Okay. Question 4 is actually really short. But question 4 is got to, yeah, this one I have to do one by one as well. Okay, do you need to have a break? Can we have a quick one now? So then, okay, so if you're not going for a break, then you read your question. This one is actually ratio and wow, see, 7, just like in the tutorial, and you see B and C. So B and C, the theory part. So theory part normally I will project the answer. Okay, so you can start to calculate this if you're not going anyway. Okay, so I'll be back. Okay, I'm back. All right, question. Okay, this one. Salona Enterprise. I say all this ratio is actually exactly the same in your tutorial, right? So I think
Yeah.
by now you can remember already the formula. So you see this subject actually you want to pass, it's not so difficult.
I just still afraid the 2 hours not enough from here.
You just have to have to do faster. Have to be fast lah. See, I have all my format here. Okay lah, I use this one. Then I just change the number. It's easier. Okay, right. Now, okay, let's see. So all the same now. This one look familiar. Okay, so all right, so we straight away go to the number. Okay, so important thing is I want to know whether you know what number to take. So you see all my formulas here, so it's easy here. Okay, so just that I need to change this one to 2020 and 2020. 2021. It's not. Okay, so gross profit ratio. So how much is your gross profit? So we start from 2020. Berapa? Come, faster, faster.
200.
200. Okay, correct. 200. 200 times 100% divided by how much is your sales?
600.
Yes. Okay, how about 2021? I mean, gross profit, how much? How much is gross profit? Important, must know where to find your number, That's why I want you to tell me the number. So, Kevin,
100
sales?
sales 310.
Right, so two of you, one person do one, so the final answer I don't have to give you, you go and calculate. Okay, so Noel will be doing the 2020, so Kevin is 2020. So how about net profit?
100.
Okay, the sales is the same now. Okay, how about Kevin? Net profit?
Oops, 50.
50, yes. So sales is the same now as above. Okay. So the final answer you go and put. So this one is actually not correct one. So okay, so final answer I leave it to you. And the next one is what current ratio. Okay, I'll go to current ratio. So how about current ratio? What is your total current asset?
150.
Okay. Current liability?
94.
Okay. Kevin? Current asset?
95.
Okay, good. Current liability?
So 60.
Okay, good. Okay, how about this one? Okay, ratio?
110.
110. Okay, this one preferable you put down the working lah.
Working hard.
Minus 40 kan? Okay. Current liability is the same as okay. Kevin?
Current asset is
Mhm.
current asset is
Current asset.
95.
Yeah, 95, and then
Closing inventory is higher.
how much? How much is closing inventory? Can you see where is your closing inventory? Chart. Which one is closing inventory?
Which one again?
Which one? Which one?
Is it the Is it the inventory at 30 September? That one?
Yes. Then 30th September is closing, no? This one?
Yeah. Sorry. 30.
So Kevin, remember, next Monday must remember, must know where to find your number,
Yeah.
So 30, So this one is 60. Okay, right. Then we go to inventory turnover. Inventory turnover. This one is what? How many days? Oh,
3, 6, 5.
here. So days is here. Okay, days. Okay, so now, do you have average inventory? Let's look at the question again. Do you have average inventory? See?
Yeah.
So this is opening, right?
Yeah.
This is opening. So your closing is here. For 2020 opening, for 2020, this is opening, and this is closing. For 2021, this is opening, this is closing. That's it.
Yeah.
Right? So this one you must know. Okay, so in this case, so this one, opening is, apa opening?
20K.
20, so it's 20 plus 40
40.
divided by 2, right? And times 365. And sales, for sales, this one is trade receivable. I shouldn't use this one. Okay, go back to here. Inventory. Oh, right. So, but this one, ours one is days, isn't it? So I should actually put this one. So here will be, how much will be there? 20 plus 40, isn't it? Right, divided by 2. Okay, and then how much is your cost of goods sold?
400.
This one. Then is what? 400. Yeah, 400. And this one we have to times 365. Okay, so the complete one should be like this. Okay, Kevin, your turn.
It's a 40 and 30.
40 plus 30 divided by 2, right? Okay,
Yeah.
365. Okay. How much is your cost of goods sold?
It's 210.
Okay. Can I? So know how where to find your number, 210.
Will it?
Correct.
The formula they won't give. We have to know ourselves.
Yes, formula you have to.
Oh
Yeah.
I think.
Yeah. You have to come up with your own formula, Formula will not be given, Okay, they won't give the formula, All right. Okay. Next is what? Trade receivable. Ini trade receivable. Yeah. How much? Berapa trade receivable? Nora?
Uh, 60.
60. Sales?
600.
Kevin?
Trade receivable. Trade receivable is 40. Oh, and then the sales is. And
You
that's
you used this number before.
310.
There's only one sales, okay?
Yeah.
Yeah, all right, okay. Trade payable? This one, okay, this question you need to calculate purchases. So you go and find your purchases first. So I have to find purchases first.
Oh.
Yeah. So how much is your purchases? Okay. So two of you, you find your own purchases. And you know your number, you know cost of goods sold, you know opening, you know closing. Okay. I'm waiting for your answer. Yeah. How much is your cost of goods sold. So remember how to find purchases. Purchases equal to
Minus
purchases equal to cost of goods sold, right? Okay. Minus opening stock plus closing stock. Yeah. Okay. So I give you a formula again. Come calculate.
minus
So one Noel do 2020, right? Kevin do 2021. Okay. Tell me your number.
200 is it?
Okay. Kevin is 200. Okay, correct. Kevin, what is your how much your trade payable?
The trade payable is 50.
Yes. Okay.
Usually they don't include the other payable in the trade payable.
Yeah, it's trade payable. Don't look at other payable.
Okay.
Okay. Noel, got your number?
the purchase is 420.
Okay, good. Trade payable?
84.
Yes. So yeah, so days in days, then your answer in days, no? Right? This one you all know, right? Current ratio, quick ratio is how many times, right? So you don't look at all these answer not correct one, huh? So yeah, okay. So what is the correct answer, leh? Okay. So this one later on you can calculate lah. So I let you know the you know the working, then you should be able to get now. How to mark this one? Now, this one, right, is actually like this, huh? So it's important that you show me your working. You see, this one half mark, answer half mark. Okay, so like this, one ratio. Okay, one ratio is already 2 marks. Understand? So here you have 7, right? So 7 times 2, so it's 14 marks. Understand? Correct? So this one working, half, answer, half. Working, half, answer, half. So each one gross profit 2 marks, one net profit also 2 marks. Yes. Understand? So that's why it's important that you actually show the working. This is actually the working. This one is very, very important. Okay?
Okay.
Yeah? Okay, so calculation one is actually very easy. As long as you use the right formula and make sure you know how to find opening, closing stock, average stock, all these things. So read your question carefully. See, here they give you the opening. How do you notice the opening? You see, current year, currently we're at 2020. So this 2019 must be an opening already. Right? Okay, calculate the following ratios for Savannah Enterprise. So gross profit as percentage of sales, all these things. Okay, now based on the financial statement and ratios from part A above, comment on the financial performance between the financial year ended 2020 and 2021. Yeah, okay. So this one I show you now. So from your answer, so you see this is your answer. So 33. So you can see 2021 gross profit actually dropped, right? Net profit is actually, well, can say maintain. Okay, slightly, but still can say maintain. This one also slightly now. Current ratio, well, you see, very close, huh? Quick ratio also quite close. Inventory turnover. Oh, this one is very high now. Take 60 days. This is actually not that good, huh? Okay. Trade receivable also take longer, to collect back. This is also not so good. See, we even take longer to pay our trade payable. Even longer. Yeah. Okay. Okay. So you got to analyze it one by one. So first one they say from 2020 to 2021 profitability has maintained or dropped very slightly. Profitability dropped a little bit. Okay, profitability refer to, actually here, profitability refer to net profit and gross profit. Okay, this one is actually refer to gross profit and net profit. Is that correct or not? If you look at the number, right, it's actually Yeah, it's actually a little bit near, is it? Very near that, correct? Less than 1%, right? Yeah, so that's why in terms of profitability, we say profitability refer to gross profit and net profit. So drop very slightly. Okay.
They both usually,
Liquidity,
do they both usually drop at the speed? Is it possible one the gross profit go up and then net profit go down like that?
sometimes yes. Yeah, sometimes yes.
How will we comment about it? Like this
Then you will say if let's say gross profit drop, so you just say okay, gross profit drop. Okay,
or
why gross profit drop? It could be high, your cost of goods sold is high, your sale is actually low. Yeah, correct.
so we talk about
It's
then one
like
by
yeah, it's like your sales actually drop. Then at the same time your cost is actually up. So that's why overall it's a drop. Okay, for net profit, okay, let's say net profits actually increase. Okay, why? Oh, it could be you have a good control on your operating expenses. Your operating expenses actually lower, yeah, compared to last year. Like that. Yeah. So overall, your net profit, margin will be actually increased slightly. But normally, if your gross profit drop very much, then your net profit is a bit difficult to increase. The relationship is like this. Okay, liquidity, we actually look at this one, current and quick. Okay, so from here you can see already, they already actually show you. Okay, liquidity we talk about. Now this liquidity is actually short term now. Okay, our short term have maintained or dropped slightly. Yeah. Also maintains, I would say it's maintained now, right? You see, 1.6, 1.58, 1.17. Yeah, it's actually maintained. Yeah. Well, you want to say drop slightly also can. Okay. Inventories turnover, trade receivable, and trade payable days have all lengthened somewhat significantly. Okay. Now the last three actually increased. You see, from below 30 days increased to 60 days, so it's like double. This one also increased by half a month. Okay, this one also increased by about what? Half a month, correct? About 20 days, right? Okay, so that's why here it says inventory, trade receivable. Okay, so inventory. Yeah, your inventory, okay, yeah, all lengthened somewhat significantly. So why? Okay, so you can actually reason out. So sales has dropped significantly. Okay, so is it sales dropped significantly? Okay, so let's see. So your sales, is it dropped significantly? See 600 to 310. About, yeah, drop about 50% or so, yeah. Okay, so correct, Okay, so then it says sales dropped significantly, cost of goods sold has dropped also. This resulted in the profit not being affected as much as it would have been. Yeah, so you see, your sales drop, at the same time, your cost of goods sold also dropped. Luckily, your cost of goods sold also dropped. So it ended up, your gross profit only dropped a little bit. Imagine if your sales drop and your cost of goods sold increase, okay, your gross profit margin definitely will drop significantly. Right? So however, the drop in sales could have caused liquidity ratios to drop slightly. Yeah, okay. The drop in sales will actually affect the liquidity slightly, and efficiency ratios to be affected significantly. But because your sales drop, then it affect your efficiency. Efficiency is actually talk about these three. These three are efficiency. These three. This is actually efficiency. This is actually your efficiency ratios. Okay. The efficiency actually talk about these three. Or to be affected significantly, isn't it correct? Yeah, these three actually increase. So Savannah has reduced its potential loss by scaling back on its operation, meaning it tried to lower the cost of goods sold, lower the inventory level, and lower the supplier owing. Yeah, so 9 months. So you see, you need to find you need to really study the financial statement. Yeah, go and look at your sales cost of goods sold. So in terms from the point of gross profit, right? When you want to talk about gross profit, it's actually these two, right? Sales and cost of goods sold. Sales and cost of goods sold will affect your gross profit. What will affect your net profit is actually your expenses. You see, cost of goods sold drop, expenses also drop. So that's why I ended up both your gross profit and net profit is only slightly dropped. Yeah, slightly dropped. You see, your sales dropped quite a lot, but luckily your cost of goods sold also dropped, expenses also dropped. So that's why both gross profit and net profit, the drop is not so bad, just a little bit and slightly dropped. Yeah. Okay, and then this SYFP. So inventory also dropped already, trade receivable also dropped a bit. Okay, bank balance also dropped. See, non-current asset increase. Okay, equity-wise, share capital maintained, reserve increase, trade payable actually decrease. Yeah, and other payable maintained, right? Okay, so that's okay. Actually, this question is actually very simple. So when you got to think about the point that you need to write. So I got to study the number and so this part is actually up to you, up to your understanding. If your understanding is good, okay, then of course you can get a lot of marks now. So again, because this part you need to think, right? You needed to think and you need to come up with the sentences. So if you think this one right take too long, okay, skip. You come back later after you finish all those that you know how to do, then you come back. Yeah. So go and do the calculation. Say 14 marks. Of course, you do calculation first. Right. This one 9 marks. Okay lah. You come back later lah. Right. Okay. Okay. Yeah. So you adjust your time because I don't know how fast you can be, how fast you can do it for those. So remember, you do the one that you know how to do first. Always do the one that you know how to do first. The one that you're not so sure, never mind. Just leave it. Yeah, meaning you try to get the most of the mark first. You see this one, 2 marks. Ask you to give opinion. I said Savannah Enterprise is located in Jena, a country which has suffered from problems with pests and a slight drought recently. So drought means it's very, very dry, okay? No water, not raining, so it's very dry, so very difficult to plant. So however, other farmers have come up with a number of ways to deal with this problem. So in recent years, they have started using plants that are not so susceptible to pests and build an irrigation channel from a water source to reach their farming land. So they have also invented new methods such as the use of donkeys, more environmentally friendly pesticide and other technologies such as genetics. So in your opinion, which of the above method is more cost effective for Savannah Enterprise? And explain your reason. Yeah, so here they actually, come up with 2 different one, right? So which one is better? So this is an open question. There's no right or wrong answer. So up to you, up to you to write. Yeah, up to you to write. Okay, so as a should use its cash reserve on researching drought-resistant plant. It should build irrigation channel with cash reserve. On the other hand, a more cost-effective method would be to rear donkeys to keep away pests. So this question is to have the student practice their expressive skills. So any 2 relevant point coherently explained can be accepted. 1 mark each point. So there's no right or wrong answer. So basically, you need to explain how do they actually use the money. Yeah, how do they actually use the cash that they have, the reserve that they have. So you can see they actually have reserve. And this one, 56.95. Yeah. Okay. Oh, so it took us less than 3 hours to explain. Yeah, of course, some ratio just is very fast because I already have the formula. All right. So any question? Are you okay? Confident to have the exam next week? So and with the tips, only 6 chapters, I think you should be able to pass. Pass shouldn't have any pass. Should be able to pass. Yeah. So after we go through this set, the question is actually okay. It's not difficult. It's very similar, quite similar to your tutorial question, right? So when you do your revision, really have to go through your tutorial, and you have time, then you do your past year. So okay, you can so during the holidays you you want to do revision, you can do the past year. If you need answer, you let me know. If you need answer, you let me know. Okay?
Miss can send this one the answer.
Sorry?
Can send the answer to the WhatsApp.
Cannot. Answer, I cannot give it to you.
Okay.
You want the answer?
Uh,
Actually, normally answer, we don't give it to the student. Yeah. It's like answer is actually for the lecturer to use to discuss, but we should not share the answer with the student.
No, I just watched the
If
recording.
I can give you the answer, a long time I already give it to you. Is it like tutorial answer also it's supposed to actually discuss in the class. But there's one tutorial answer I can give it to you, the ratio. Yeah. You want that answer, the ratio?
Can also.
Can?
Right.
I can give you the tutorial answer for the last one, this one. Yeah. Okay. So, any other thing? Any other question that you want to ask? Then can.
Oh no.
No, okay. Kevin, you.
Yeah, I can do the calculate the ratio. I can do the. I don't know what's that called again. The thing that need to keep. The one that need to add and then need to minus the inventory. That one. I forgot.
Inventory. Yeah, I already shared the financial analysis answer.
Oh yeah, I think should be okay. I just
Should be
only
okay.
only the ledger. I afraid I might if they want me to write all the ledgers about the things I might do last time. Yeah, that thing only.
Oh, okay. Well, I would say, since it's tips, right? So you all can be more focused now. So you don't waste your time. Focus on the chapter. So if anything, then you let me know. Lor. When you need any partial answer, you let me know.
Okay.
Okay.
Right? Can?
Okay.
Thank you.
So all the best, yeah?
Okay.
Yeah, all right.
Okay.
Okay. Thank you. Bye bye. Here's my